What's going on, everybody? Hope you all have had a great weekend. I wanted to first off start by saying I appreciate you taking the time for joining me as we go ahead and look into the week of the 18th. Of course, we do have FOMC this week, so a big week ahead in the markets. And let's look at some areas where we may want to manage our risk, engage the markets, and see what we can potentially expect. Before we do that, reminder though that this video is for educational and entertainment purposes only and in no way should be viewed as financial advice. Alright, so with that being said, let's start to look at the charts here. I'm going to take a look at the weekly. Starting us off here from a bigger picture perspective, and we still have this compression pattern being put in that we have been watching, but when we're looking at it from the weekly perspective, what do we have here? We have a two bearish candles inside bars printing here 2 weeks in a row, but this one is a little bit different in the sense that we did the bulls tried to push us up higher here, and we have the bears coming in and putting in that selling pressure. You can see the wick right here. It's pretty much the opposite of what we saw last week, where the bulls were putting in the buying pressure. A little bit of that push-pull here in the markets, and very tricky for a lot of people to trade while we are in this range-bound type of consolidation. So just be careful as we try to navigate here, because we're not really going to see, obviously, any big move until we start to break out of this range. And the big thing is, obviously, we have a bigger picture range that we have been trading in, if we want to look at it like this. But where are we right now? We're basically trapped right in that basically 50% zone in between this range that we have been trading in. Now this is a broader range, but let's take this away here and we'll make it a little bit tighter. You can just even say something like this, right? And the bearish thing, I would say, from this perspective, is we did close in the lower part of the range from these candles here. The candle on the 28th. So this, I would say, we closing in the lower part of the range is not a good sign for the bulls. That being said, though, we did close below that 445, that 444 area. Certainly the 445 obviously closes a little bit more convincing, but really didn't get a convincing close for me under the 444, and that's going to be that big bullish and bear pivot that we're going to want to see close, over if you're a bull and under if you're a bear. We closed at 443. 37, and we were down about 1%, about a 1% or so, just a little bit over, about $5 move to the downside. The big thing here is that the lack of follow through from the bulls, I think, was a little bit discouraging, coming back up here to these equal highs and then pushed back down, closing in this lower part of the range. But still, overall, we are in this kind of a bearish to neutral stance overall, and maybe, we'll see, will FOMC be the catalyst that's going to take us, in one range or the other. But until we do get a break, it's going to be hard to really see that strong momentum overall. But the lack of follow through here, no new higher high. Yes, we can still have an argument for the the low here, lower high, and now it's not even a lower low. It's kind of an equal lows being put in here. So we are trapped, as you can see, in between this area. So just be careful as we try to navigate this overall. But let's take a look here from a daily chart perspective, and if there's anything we can take away here. Now this is definitely looking a little bit more ugly. You can see closing just slightly below that 444 and a little bit in the lower part of the range, but gap up. Actually, let me zoom in a little bit here. We do have this, you can see how we tried to push up here, gapped up, pushed down, get pushed up again, or excuse me, pushed up here, gap up, push down, tried to push up again. Then we got a nice move here on Thursday, and what happened on Friday, pushing it back down here. So look at all the kind of the effort that the bulls had to put in to push us up here, only to really get slammed back down. This might tell me that the bulls are getting a little bit tired trying to put in this move. And you can see here with the move up from Thursday, we really have made a more definitive higher lows being put in here on the market. But the fact that no new high was put in is not encouraging. All right, so what else can we get from this perspective? I don't think that there's too much more. I wanted to go over here on this chart. So let's kind of look really quickly into the economic calendar and see what we've got here. Of course, we already kind of mentioned we do have FOMC here on Wednesday the 20th. Initial jobless claims we will take a look at as well at 8:30 on the 21st. And we do have a Fed speaker on Friday early before the market opens. But we do have flash services PMI we'll be taking a look at, and we have Cash Carey and Mary Daly speaking on Friday as well, both at 1 o'clock. So we'll keep an eye out on that as well. Of course, FOMC is really going to be the main thing that everybody will be watching. Of course, the announcement comes out at 2 o'clock, and then Powell will go in and speak at 2:30 Eastern Time. All right, so now we have the big gap down. So we're going to see tomorrow if we do get any sort of retracement, maybe even start to set up a bit of a daily bear flag type of scenario. But it'll be, like I said, it really wasn't too convincing of a close for me under 444. So it's very possible that we pop up above and recapture that and hold. But as long as we do hold below 50% of this candle here, we're going to be maintaining a bit of a more bearish to neutral stance, and then maybe we end up doing this, like I said, setting up that type of bear flag type of scenario, but we will see. All right, let's take a look at some of our other charts here, see if there's anything else that we can take away. Let's take a look at the trend lines really quickly. Okay, what do we have right here? All right, not too much still, just you can see stuck in this range here, coming in just barely below this bottom of the range. And actually, the big area that we really want to watch here as well. Okay, here's kind of the range that we are trading in right now, and you can see this look above here and failed back down to the bottom of the range. So let's keep an eye on this 443.30 area right here, because if this starts to give up, that might really give us the push back down. Then we're looking for a retest, and then going to give us that final move down to the weekly lows of the range, coming in around 432. So let's watch out for that type of scenario if we do really start seeing closes and confirmation under that 443.30 area as another scenario. But it's very possible that we just end up trading potentially in this range until the FOMC. I probably would expect that. So I wouldn't really expect to see this type of move Monday or Tuesday, but maybe later in the week, maybe into next week as well. But if we do start to get back over, that 445, 446 area, then we can start to look to potentially trade up into the top of this this overall broader range that we have been in currently. So, all right, let's take a look at some other pictures of our. See about our day trading. Is this that one? Okay. All right, so you can see here, and let me take this out. No coincidence where we kind of ended up stopping at the end of the day here, right at that 38.2 extension here, right down by these lows. We're going to keep an eye here. Here are the weekly lows that we will watch, but as long as we can hold this 38.2, for me, I'll be watching for this, and I'll be watching for that retracement. I don't know if we'll make it all the way up to 446.20. Maybe we'll only make it up to around 445, 445.25 before coming back down. But it wouldn't surprise me to see a potential move like this, and maybe we stay in between this range before having to see FOMC and then making a move. But let's watch out for this. I mean, I don't know. We just had a trend day, on Thursday up, a trend day down. A lot of momentum, volatility has kind of been pushed and out of the market, especially coming to FOMC. So we might not even see a range like this. I think that's kind of being a little bit generous. We might only see price action really come, into something like this, halfway, only up to 440, 444, 445 area. So that's very possible as well. But as long as we hold that 38.2, we do have a chance again to trade up to the 50%. If we do get over there, okay, then we can start to look for that higher prices into the 61.8. But if we do break that 440, 443, look out below. Bigger picture, we'd be likely to come and trade back down into the 440, 439 area. So, all right, let's take a look at some of our internals really quickly before we get into our balance zone. What do we take away from here? Here, let's take a look. All right, ADD, very weak right here. We were almost in the trend lower area. Breath was advanced declines were below zero. Weak here. Look at the outflows on the VOLD here. Tons of sellers coming out, really pushing us to lows on the week. Very aggressive there. Certainly below sectors right here all were down. Don't really want to see XLK and XLY are more risk on tech sector, and doing so poorly. And energy, of course, was down quite a bit as well. So just right across the board. But XLF, actually not putting in too bad of a move, I'd have to say. A bit impressive. So we'll see if we get any improvement here on the internals, but this is all not looking the best as far as that's concerned. Let's take a quick look before we go into our balance zone still here. Now we're looking at the amount of companies trading above their 50-day simple moving average. Really not too much of a change here. We are down into this area here where we did find some prior support on the broader market around this 30% zone. So we will be watching that. This certainly can get a little bit more extreme, but we have seen the market have some pushback from this zone before. So let's see how this develops. I think the 200-day moving average composite here improving just a little bit, closing just under the 50% mark. So let's see if that improves. I think that would bode well for the market. We can start getting this back over a 50% ratio. I think that could show a little bit more improvement for the broader markets. But let's see if they can recapture that. But we really need some more improvement in that short-term momentum, getting back over 50 for the market really to start to move. But let's see. I mean, we're getting real close to this area. So from there, we could have an opportunity to make a move and start to snap back in the other direction. But we will see. All right, so let's take a look at some of our balance zones, what we're going to be looking into coming into tomorrow, and what to expect. Again, be careful the next few days. Obviously, coming into FOMC. Let me just push this out. Okay, so here, all right, so we're going to be hanging out. Whoa. We're going to be hanging out down here, and yeah, so as long as that 443, this area, we want to see this top of the quadrant here hold for us. Otherwise, if it doesn't, again, we'll be looking to sweep those potential lows, but we only may see a move as long as we can hold the 443.75 area. And certainly if we can get back over 444, we'll be looking for moves for the bulls back up into 445, 445.50. So I'll probably be looking for a little bit of a retracement tomorrow off the top of in the morning session, and then maybe an afternoon dip, and then just kind of a consolidation type of range here. But if we're hanging out here again above 444, 443, probably take a look at the 445 calls for moves into this bottom part of balance in 445, 445.50. Yes, one could potentially think about a short trade in that area if we came up into here looking for a move back down. That is certainly a idea. But if we hang out and we start to consolidate here into this range like so, then we'll be looking for moves back into our half gap at 446.23. So if we can get over 446.23, now of course that area is another area where we could look at a possible direct short or a look above and fail short. But if we do get back over, and then we'll be looking for the upper part of the range up into 447, 447.50, where again we can look for potential short trades back into this part of balance. But what if we wake up here and we are below 443.75? Well, we're not going to chase this move down here, of course. We are going to wait for a move coming back up into that area, retesting, looking for short, looking to retest last Thursday's lows right at the 442.75, and if in fact they are able to give that up, then we'll be looking for the lower part of the range into the 175 area into here. But yeah, I don't think we're really going to see much more of a range than that. Even some of these might be a little bit generous. But either way, it's good to have everything kind of mapped out and just in case. But I do not have very high expectations for Monday trading or really Tuesday, so I will be taking it defensively, and yeah, we'll see what we get. But other than that, I hope you again had a great weekend. Thank you so much for taking the time joining me on these videos. Really means a lot to me. And if you haven't already considered it, please consider subscribing. Smash that like button if you're enjoying the content. Don't forget to turn on that notification bell so that way you are alerted every time that we do put out new information about the markets. All right. Well, I hope you have a great night and take care.